The R&D Tax Relief scheme has changed significantly over the last 3 years. Whether you're new to claiming or adjusting to the latest requirements, understanding how to navigate these changes can help you maximise your benefits. I'm Darren Wilmot, MD of Easy R&D, and in this video I'll walk you through what's new, what it means for your business and how to adapt. So let's start with the pre-notification and advanced notification forms. For accounting periods beginning on or after the 1st of April 2023, if your company is claiming R&D tax relief for the first time or hasn't claimed in any of the previous 3 years, you must submit a claim notification form. The deadline for submitting this form is 6 months after the end of the relevant accounting period. So this ensures HMRC knows your intent early on, avoiding complications later. Also, the new additional information form means claims need to be a little more detailed. You'll now need to provide a breakdown of your projects explaining the R&D undertaken and who was involved. Yes, it's more admin, but it helps clarify eligibility and strengthens your claim. Next, let's look at expanding eligible costs. In some areas, R&D tax relief has become more generous. Since April 2023, businesses can now claim costs relating to cloud computing, data storage, AI, operating systems and software platforms, providing they're directly linked to R&D activities. This is a fantastic opportunity for tech-driven companies to leverage these additional expenses, optimizing their claims while continuing to innovate. The new merged R&D scheme has brought new dynamics, and it's essential to know how it affects your business. Some SMEs will see lower relief rates, but for R&D intensive companies, there's a higher payable credit rate available. A big shift happened in April 24. Subcontractor costs outside the UK are no longer eligible. If you work with international partners, make sure you review your subcontracting strategy to align with the latest rules. So, what are the key changes to subcontractor eligibility? Previously, SMEs could claim 65% of subcontractor costs for R&D, regardless of the location. Now, only UK-based subcontractor costs qualify for relief. So if your subcontractor is overseas, their costs will likely not be eligible. So let's move on to who can claim. Under the new merged RDEC scheme, the company that makes the R&D decisions is the one eligible to claim. This prevents duplicate claims. Previously, both the subcontractor and the contracting company could sometimes claim for the same work. So what's going to be the impact on businesses in general? Well, if you work with international partners, you may need to restructure your subcontracting strategy to ensure eligibility. Companies must clearly define who is responsible for R&D decisions to avoid disputes over claim eligibility. In summary, as R&D tax relief evolves, staying prepared is key. Here's how you can make the most of the changes. So number one, keep detailed records. HMRC may ask for supporting documentation even for smaller projects. Solid evidence strengthens your claim. Number two, understand qualifying costs. Ensure your AI tools, cloud computing, subcontractor expenses and other costs meet eligibility requirements. And always seek expert advice. If you're unsure about how the new scheme affects you, professional guidance can make a difference. In closing, R&D tax relief is a powerful tool to support innovation, but the landscape is evolving. By adapting to these changes and being strategic with your claims, you can continue to benefit while staying compliant. So if you found this video helpful, don't forget to like, subscribe and turn on notifications for more updates on R&D tax relief. And if you have any questions, please leave them in the comments and I'll respond very quickly. And as always, thanks for watching.